Thanks for clicking. The Toronto Regional Real Estate Board released its stats for November's housing market today, showing a continual drop in sales and drops in the average, median, and benchmark prices. This comes at a time when a number of institutions are predicting an end to the Canadian real estate market correction, and analysts of the Toronto real estate market are no different, with the Financial Post, the Toronto Star, and the Globe and Mail, all painting a picture of hordes of investors and homebuyers waiting on the sidelines, waiting for the perfect time to strike. Indeed, RE/MAX President Christopher Alexander recently said that if the Bank of Canada goes 2 cycles without hiking rates, the Canadian market will roar back quickly. But is that how it usually goes for Toronto following a major real estate correction? What does the data actually say?
Not this.
Data doesn't care about motives, incentives, or bias.
I'm talking about your soul.
So what I want to do today is go over the Toronto real estate data for the month of November, take a look at those articles saying it's almost time to jump into the market, take a look at what the data actually says, especially absent rock bottom interest rates, and then discuss what to look for next. Speaking of next, the Bank of Canada is set to make its interest rate announcement tomorrow, with many predicting a 25 or 50 basis point rate hike. We'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into November's data. On to the data. First up, the benchmark price. The benchmark price, that's the price of a home, which represents the most popular set of features, and that price was down in November by almost $10,000. In October, the benchmark price was $1,098,200, and that price dropped to $1,089,800 in November. And we also saw a nearly $10,000 drop in the average price as well. In October, the average price of a home in Toronto was $1,089,400, and that price dropped to $1,079,395 in November. And we saw an even more significant drop in the median price of a home. The median price, if you'll remember, that's where half as many homes sell for over that price and half as many sell under that price. The median price of a home in Toronto in October was $940,500, and that price fell by over $20,000 down to $920,000 in November. So while the benchmark, average, and median price of a home in Toronto were all down in November, the sales to list price ratio actually remained the same at 98%. The sales to list price ratio, that measures by how much over or under asking a home sells. So if a home is listed for $100,000 and it sold for $98,000, the SLPR would be 98%. The SLPR in Toronto was 98% in October and remained 98% in November. So homes still selling for about 2% under asking. However, Toronto did record a little bit more inventory than it had in the previous month. If we look at the months of inventory measurement, that's where if no more listings came to market, how long would it take before Toronto had no more listings left to sell? And that number was up to 1.7 in November, up from the 1.6 that it was in October. So if homeowners in Toronto just stopped selling their homes, stopped listing their properties on the market outright, the Toronto market would be out of properties to buy in 1.7 months. So, in summary, the benchmark price down about $10,000, the average price down about $10,000, the median price down about $20,000. Homes still selling for about 2% under asking, and about 0.1 months more of inventory coming to market. But despite all the downward pressure being put on prices due to rising interest rates and more interest rates coming in the future, we're seeing a number of commentators say that when that bottom does come, the real estate market is going to roar back very quickly, as there's a number of investors and homeowners waiting on the sidelines, waiting to jump in the market, which will push prices back up. The Globe and Mail recently spoke to a real estate broker/investor who said that while interest rates might affect the everyday homebuyer, there will be a number of investors looking to get deals, looking to pick up properties at 30 to 40% below their peak value. The Toronto Star spoke with a mortgage broker/investor who said they're waiting until spring of 2023 for the market to bottom, and that's when they'll consider jumping in and buying up their properties. So the idea is that when the real estate market bottom comes, maybe in spring, maybe later, but when it does come, there will be a horde of investors and home buyers looking to jump in the market, which will essentially pop real estate prices right back up.
I'm going to be rich.
But is that the case? Is that usually what happens to the Toronto market after a major correction? Let's take a quick look at Toronto's market crash that happened in the early 1990s and the upswing that happened thereafter. I transposed the numbers from the PDF document into an Excel document to make them easier to work with, but let's take a look at this market correction. Between 1986 and 1989 in Toronto, real estate prices almost doubled, going from $138,000 in 1986 to $274,000 in 1989. The market then saw losses for 6 out of the next 7 years and finally bottomed out in 1996 with an average price of $198,000. After 1996, prices went up between 3 and 6% per year until 2002 when they popped up 9%, finally coming close to its 1989 peak. So the Toronto market, after peaking in 1989, took 13 years to return to that previous peak. Incidentally, in 2002, when prices popped up by 9%, that was also the year where Canada's prime rate was the lowest it had been in at least 40 years. 40 years being the cutoff when the Fed stops providing data. Inflation that year was also 2.25%. So 13 years for Toronto's market to recover from its previous peak in 1989, and that final push came on record low interest rates. After 2002, the market grew around 7% per year before finally grinding to a halt in 2008 on the global financial crisis, when the majority of real estate markets throughout the world also ground to a halt. The market then picks up again in 2009 and 2010 on ultra-low interest rates provided to recover from the global financial crisis, and then it hums along until 2016, where it jumps up 17%. Again, on ultra-low interest rates, a prime rate below 3%. And then in 2018, prime rises and Toronto's market turns into a pumpkin, losing 4% and then gaining it back again. And then in 2020 and 2021, we all know what happened. Interest rates went to near zero and Toronto's market popped back up again.
Now I own a boat.
So in summary, the first crash took 13 years to recover to its previous high and did so on ultra-low interest rates. The next major upsurge came in 2009 and 2010 and did so on ultra-low interest rates. Then in 2016, we had the lowest rates since the global financial crisis, and we saw the market pop back up again. And then finally, like we just said, in 2020, 2021, realtors got a boat. So all of these major price surges are correlated with rock bottom interest rates. So while these analysts in these articles are trying to predict when the Toronto market will bottom and what is going to happen thereafter, what they should really be looking at is interest rates. And with minimal signs that we're going to be having another global pandemic, another global financial crisis, or another dot-com bubble, and with inflation still at 6.9%, it's not clear that those interest rates are coming back down that low anytime soon.
What, Santa's not coming now?
Now that doesn't mean that there aren't some speculators, some home buyers waiting in the wings, waiting to jump into the market when they perceive a bottom to have hit, and that those home buyers, those speculators won't push the market up at least a little bit. What this data does tell us is that without those rock bottom interest rates, without that ultra low cost of borrowing, Toronto's real estate market won't be coming roaring back anytime soon. With that said, we are going to continue to track Toronto's real estate market throughout 2023 on this channel. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.